I think we can go into Q&A. And do know that some of the Q&A, if we can't answer you, we actually do send you an email, as many as we can, because sometimes just too many, like few hundred questions. But I think some attendees should know that we actually we will reply some of the questions that are not answered via email. I think so. I think we can move on to questions. Let me take the first one here. We are going to this so-called pigeonhole. Natalie, I think you want to answer some.
Okay.
I think so. Yeah.
I'll take the first question. Any potential for CapitaLand investments even after the recent upside? Any target price that is realistic? So thank you for your interest in CapitaLand. We'll be releasing our report shortly. Overall, I won't talk about the target price because the report hasn't been released to the public. Okay. Overall, we still think that there is upside for CapitaLand investment. Our target price is for sure above the current market price. Despite being a real estate investment platform, the funds and fees actually is a relatively smaller sort of contribution compared to the amount of property that they have on the books. But that being said, there is growth for these fund management or fee-related businesses, being the management of your funds and the REITs and private funds, sorry, as well as the lodging platform, which is an asset-light model that basically is based on franchising fees, management fees, and there is great potential for these two segments. Yeah, and of course, not to mention CapitaLand's ability to divest and reap capital gains from be it monetizing their assets, on off-take vehicles like your REITs or third-party investors. So of course, we are still quite positive on CapitaLand investment. Okay.
You want to take the question in the Q&A since so many people voted on the CDL. Yeah, since it's related. Yeah. Under the Q&A tab.
Okay. Okay, I'm scrolling the question, and the question is, could you comment on two key issues for CDL? Institutional investors preferring CLI over CDL due to the REIM status, and number two, the sincere deal that casts doubt about the investment capabilities and succession issues. Thanks. So for CDL, I think I'll answer the second part first, which is the sincere deal. So I think the management acknowledged that this was a bit of a hasty decision and a bit of an oversight, that the sincere deal was a bit of a mistake. And since then, I think 2020, they actually provided $1.7 billion write-down for this investment in the deal. Currently, they're trying to turn the chapter or close the chapter on this sincere issue, and the amount of the equity exposure to Sincere has been already written off, and they've even sold off their stake in Sincere for $1, which is I think it's just a small token to really just say that they want to close the chapter. The exposure to Sincere, what remains is actually the bond, some of the loans that they have made to Sincere, and then of course a bit of the USD bonds that they have subscribed to, and some guarantees which they have already impaired. Okay, and for institutional investors preferring CLI over CDL due to the REIM status, I think they currently, the way that CLI is choosing to position themselves, what they have done with this demerger is that they have privatized the development segment. And of course, as we know right now, the CDL has always been sort of positioned as a proxy to the Singapore market, or rather the Singapore development residential market. And I think that is how CDL will want to continue positioning themselves moving forward. And CDL's of course right now is a good time for them because they do have a relatively sizable pipeline, inventory pipeline, and we are currently in better times for the property market in the upcycle. Yeah. So overall, I think it's a bit of a different positioning. you can argue that yes, the REIM status seems to be relatively new and attractive, especially new in the context of the Singapore market. And however, I think it's a matter of different positioning. Yeah.
Okay, let me just take 1-2 questions before we hand it over to you on Keppel DC and also OCBC. Okay, let me just read out this one. ComfortDelGro has introduced Grab, Uber-like apps. Is there any hidden potential here, or should we not put too much hope here? I think it's more like should not put too much hope. The reason I say that is that Grab is a super app, and they're willing to lose like $1 billion. Sorry, a few couple of 100 million losses. I think if Comfort were to lose 10 million on this app, everybody will be complaining and shout. All the shareholders will be shouting. The other thing is that, but do note that right now, Comfort taxi drivers can actually leverage on the Grab app, so that's a positive. So rather than compete, rather than compete with Grab, in a way you're working with Grab so that the taxi drivers can tap on the Grab app for their bookings. Number one. The other thing which I think we can only keep our fingers crossed is that if Grab goes ahead with the spec, like what happened to Uber, they will be a bit more focused on the monetization, their path to profitability, and hopefully they don't want to lose so much to compete, and maybe hopefully they will focus more on profitability. Then the competition from Grab will not be so intense. But again, we can only hope. Yeah, I hope that answers it. I want to hand it over to. Okay, let me just take this one more before we this is from the so-called pigeonhole. There's a question on Samcorp. I will need to get Terence to answer that for you. He's not here, but let me just answer into this. Going into 2022, do you agree that F5G is growing industry to look up for? Are there any stocks in SGX that we can invest in, which you will recommend? How about Singtel and StarHub? Okay, let me just answer this because although we didn't touch much on telco, we are not optimistic on 5G. For us, 5G right now, there isn't any major killer applications. I think maybe 5G, maybe just make your YouTube go a bit faster. I'm just kidding, I jest, but probably that's the truth. But we do like the telcos right now. I think what we've seen right now is that 5G has allowed them to creep up the ARPUs, even to our surprise. So even though the selling ARPU, which is selling price for the telcos, are down because there's no roaming, but we're beginning to see them slowly creep up because they're selling more 5G plans. So with 5G plans, subscribers are more willing to pay a bit more. So that is a positive. But in terms of a big bang 5G, I think so far nothing. Even the telcos can't give us a good reason. And that's why we think telcos look a little bit more attractive now. They pay like 4% yield. And you got this reopening optionality. If the borders reopen, the profits can just, for StarHub at least, could maybe jump 10-15% immediately because of the roaming revenue. Okay, I think we can move on to some of the questions from the Q&A tab. Sorry to jump around. Why is Keppel DC declining? Let's see if you can help.
Okay, so for Keppel DC, they have actually had quite a good track record of growing their DPU. Just last year, their DPU actually grew by about 28%. This was on the back of course, a lot of AEIs that they have actually conducted, bringing more power online, allowing them to actually, because the data centers actually charge based on power. So they are limited by the amount of power that they can sell. And they have done a lot of AEIs converting non-data center space to data center halls. And this actually allows them to, make their portfolio more efficient, help them grow their DPU. And so right now, their portfolio is pretty much optimized. The way for them to grow DPU is through inorganic growth acquisitions. And I think, so far, since the end of last year to right now, they've only picked up 2 smaller assets. So that might actually be a bit of a signaling that there is a limited growth or maybe some difficulty for them to acquire assets. However, I think our target price is actually based on assumption that they will be able to acquire another 500 million worth of assets, and by the end of the year, I think so far in terms of quantum, it is below the 500 million mark. But in terms of when the acquisitions took place, one of it actually took place earlier, like I think a few months ago, and recently they announced another one. So I think overall, in terms of DPU accretion for this year, they will still hit or be in line. We also expect that another reason that could possibly be weighing on Keppel DC is, there were also talks of Digital Realty, which is another very big data center operator on a global scale that might be eyeing a potential listing in Singapore. Overall, I think Keppel DC's price to NAV currently so this potential listing of another pure play data center REIT could also be maybe investors are actually trying to keep some of their capital for if and when this IPO actually materializes. Keppel DC also actually announced expansion of their investment mandate. So actually, they were a pure play. Their mandate was actually for a pure play data center REIT. However, they're actually expanding this mandate to include other kinds of real estate, more skewed towards, of course, the investment industrial kind of real estate, or your infrastructure real estate, your telephone towers, deep sea cable kind of assets, and that could be an indication that they are facing a little bit of a difficulty in terms of acquiring. From a fundamental point of view, majority of their assets, or rather 75% of their earnings is actually coming out of Singapore, and in Singapore, the kind of assets that they are holding are the co-location kind of assets. Currently the moratorium, there's talks that the moratorium will be lifted sometime later this year. And of course, that means that there's a potential that supply will increase in the next 2 to 3 years time, and that might be another reason for caution. However, of course, in the interim, in the next 2 years, which is when there is still a bit of a tighter supply, and when Keppel DC's leases are actually coming due, we're actually expecting a modest rental growth for Keppel DC. Yeah. Okay.
Oh, okay, thanks, Natalie. I think we've been given instructions to try to answer the questions in the VBox first. So let me just read this out. Semicon industry is trading on the downtrend recently. Is there any scope for growth in clean energy that could generate into real profit margin for SCI? Is the target price of 230 to 250 range still intact? I think our target price is 201. I think we have a neutral call on it. I'm not, pending, I don't cover because it's mainly Terrence, but I just don't see what great returns can you generate from clean energy. There is growth there, but in terms of the returns, it's all going to be bidded out because everyone is going to be competing for these returns. And in the end, you're just going to be fighting like who has the lowest cost of capital. So I'm a bit more neutral, a bit more pessimistic on the ability to enter into clean energy in terms of the potential returns. Okay, we'll just take one last one. I think before we end, 1 or 2 more before we end. I invest in IX Biopharma and Silver Lake. May the speaker briefing some outlook about these 2 companies. For IX Biopharma, there are 2 catalysts that we're looking for. Number 1 is the FDA approved, is they get into the out licensing agreement for their wafer seal, which is the drug. We are hoping we're hoping this year, but because of the pandemic, so maybe next year, because they're still in negotiations. The next catalyst would be the IPO in Hong Kong, which will not only just raise money for them, it will also kind of re-rate the valuation for them, because there's been a whole host of such drug companies listing in Hong Kong where they got a huge valuation premium. So these are the 2 main catalysts for IX. Now for Silver Lake, I don't cover, but in the most recent briefing, I mean, you can say that there's an upturn in contracts coming out from the banking sector. So there's definitely an upturn. You will notice that the order books from the 4th quarter has been the best for the year. So because of the pandemic, a lot of the banks have been holding back on investments, but right now they are re-accelerating their investments into IT, especially digital, because I mean, it's quite obvious that there's a fintech breathing down your neck right now. So a lot of the banks are ramping up their capex. So the pandemic did kind of slow down a bit of the spending, but there's a recovery in for these two stocks. Okay, this one I can't really answer. Is the power station operators in Singapore able to pass increasing fuel costs? I'm not too clear about that. I think I need to get Terence to. The next one is Philips recommending LHN and Koda, but not on the top 10 list. Yes, so for us, we don't want to put too many small cap names in our model portfolio. We try to keep it balanced. There's a lot more large cap names in the model portfolio. Okay, yeah, I think we probably have to end it for now. I think if there are any more questions, I think we should try to raise it. Some of these a lot of the questions are technical in nature, and we should try to do it in that sense. I think we see a lot of people already heading for, because there's a prime minister, but let's answer one last one if we can. Glenn, do you want to help out on the OCBC? Let's answer this since so many people have asked this.
Yeah, sure. Okay, thanks, Paul. So for OCBC, I think the question was, is the bank's recent poor performance due to an exposure to China and Evergrande? I would say, if we look at OCBC's recent results, we can see that only about 29 billion, or about 10%, sorry, let me get the figure right, about 10.5% of their percentage of their total loans is exposed to China. So this is China and risk that is traced to China. And I think recently we can also see that our minister, Taman, has also said that there's insignificant, I quote him, the banking system has insignificant exposure to the China Evergrande Group, and less than 1% of its non-bank direct lending is exposed to the China's property sector. So I would say that no, OCBC is not very exposed to China. And one of the main points as to why their poor performance might be the dividends. So their dividend payout was lower than expected for first half 2021. It's actually similar to the pre-COVID dividend payout in 2019, but the payout ratio was 42%, which is lower than the 2019 dividend payout ratio of 49%. So that might be one of the factors, but we will have to see again. Yeah, Paul, if you have anything else to add.
Okay, I think we need to end. We already crossed the 12. I think because of there's another more important announcement coming in. So I think I'd like to thank everyone for your attendance. We will definitely send as many emails as we can for some of the questions that have not been answered. So apologies for that. And so again, we'd like to thank everyone for your attendance, for your time, especially for all your questions. We will try to get back to you. With that, I'd like to wish everyone have a good weekend ahead, and let's see what the Prime Minister's speech is. Hopefully there's some good news, because I'm not sure actually what is the announcement going to be. With that, I'd like to thank everyone and have a good week ahead, and take care and stay safe. Bye-bye, everyone. Thank you.